Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. So usually on Mondays we're taking a look at the cryptocurrencies, but since it was extraordinary events on the weekend, just my comments on actually what we've got on the Mondays open. So as you can see, the big risks have not been confirmed. So closing of the Hormuz Gulf actually has not been confirmed, and Hormuz is not closed, which means big relief for euro currency and China, because as United States mostly doesn't depend on delivery and supply of the crude oil from the Middle East, Europe buys a lot, and that was really big risk for the euro. Second is Iran shows no significant response on the recent attack by the United States. Yes, risk still holds, and Iran could respond later, but for now, it seems that it brings no negative consequences for United States military bases in the region, which means that actually absence of this response lets the United States to save the face and out of this hot stage of the confrontation on actually kind of the showing his power, so on the strength side. So market behaves so that they do not believe in any further escalation and that conflict will stand for a long time. You can see that stocks have opened with just minor negative zone, so just 1 and 1.5% for opening. Crude oil has jumped to the 80, but now is also moving lower. The same you can see on the gold and euro currency. We haven't got any big really changes. That's actually what we have currently. So tomorrow probably we will be able to prepare some trading plans for the gold and for the euro currency, but most probable, if we will not get any extraordinary issues, that's probably the tendencies that exist currently on both assets will hold. Now let's take a look at the Bitcoin. Here are lots of things to talk. First of all, we're starting as usual from the weekly chart. The downside action down right to the 100 level, 97 level that we discussed on Thursday has been done perfectly. But what's more interesting right now is that with this slow starting of the downward action, this reverse hand and shoulder shape gives more and more chances to come to reality. It means two things. First of all, we will have to be extra careful with any bullish signs or bullish ideas. Because potentially this pattern suggests that market should drop down to the 90 even, maybe slightly higher, 92, on average around 90 even. So it means that any pullback here might be temporal, while this potential shape of the pattern holds. So we have to be extra careful with any bullish signs here. Second, is market showing some action in this direction. It means that this level might be very interesting for a possible taking the long position. Also, on the weekly chart, market is coming close to MACD line, and maybe even this week it could start floating. And if somehow suddenly we will get the bullish grabber here on this week, maybe on next week, that might be a really important thing, as Bitcoin could start upward action earlier. So not dropping back down to this level, but based on the grabber that may be formed in the weekly chart. So this is another pattern that we have to keep an eye on. That's probably all that we need to see to look at on the weekly chart. And dropping down on the daily, you could see that our target 97 has been hit perfectly, 97.60. Although we talked even about shallow targets around 99. So it's an extension down that we discussed. Market now has formed this garbage triple to buy, but this most recent pullback here, mostly this minimum target of this pattern almost done. Yes, we have the divergence, but the divergence alone is definitely not sufficient background for making decision on long entry. Currently, you can see that trend remains bearish. If you take a look at the oversold area here, so you could see where market stands right now. You can see market is not at oversold, so potentially it could drop even further. So oversold here stands on 96. So that is probably just reaction on the agreement support of the fib level and downside ABCD pattern. But this reaction mostly, well, at least it reached minimum pullback target, so 30% retracement is almost done here. So that's why currently with the bearish background, it's very risky to consider taking new longs without corresponding patterns. What these patterns might be. So on a 4-hour time frame chart, so actually we've got the downside performance, but you can see 1.7 target has not been reached precisely, so market just hasn't reached it for a few dollars here. And the same we could say about inner ABCD 1618 extension that stands 96. So if bearish context will not change, later market could turn down once again and trying to complete this target. So that mostly just a reaction on this daily support, and because this big ABCD on the daily is just more important than this minor and smaller ABCD inside of the butterfly. Now we need to keep an eye on this reaction. On the 4-hour time frame chart, we see that area around 103 seems very strong resistance. And once market will reach it, we need to keep an eye on what will happen. If somehow we will see the upside breakout, upward continuation here, it could mean that indeed market could try to change the direction. But since overall context right now still remains bearish, it might be just the testing of the resistance and dropping further. For that purpose, to understand better what is going on, we need to keep an eye on the hourly chart. On the hourly chart, you could see, here's by the way, our minor butterfly also has been completed. The 1618 extension that we talked about on Thursday. But this is already the 30% retracement based on this downside action. So you can see it on the 4-hour time frame chart. That's the target of this butterfly. Market barely hasn't reached it, but now you understand it's too late to take the position because distance to the target very small. That also relates to this characteristic to buy. But on the hourly chart, here's what we could see. 103, it's potentially might be the neckline, and if we will get here the kind of the hand and shoulder shape here, or it will be in kind of the compounding engulfing pattern, that might be the pattern that we could try to use, at least on the intraday charts. That might be the background for taking the long position for at least deeper retracement if market will not go further to the upside. But this pattern is not formed yet. And Bitcoin, as well as any other market, also depends on the geopolitical situation. If our situation starts changing and the further escalation, Iran will show a big response and maybe even to United States. We can't exclude it totally, although we consider this as a tail risk that could happen. But totally, we can't take it off the table. Situation could change. But if everything goes as market suggests, that conflict will start to fade gradually, and will not last for too long, Bitcoin could return back to the positive performance. So, as a bottom line, what we're going to do here for now, since overall context stands bearish and we do not have yet clear bullish patterns in place, we do not take any long position by far. For this potential purpose, we watching for hourly chart and this possible head and shoulders pattern. That also might take shape, as I said, some kind of compounding and engulfing on the 4-hour time frame chart. In particular, we're watching for reaction on this level. So that and towards what we have. If you would like to take the short position, probably this area seems as very interesting for that, because if market even start forming the hand and shoulders, the pullback from the 103 will happen at least to the 101. So to form the right arm, or even lower if bearish context will remain on the market. So for the bears, I would say that you could keep an eye on this level, but you will have to drop your time frame even more, probably to the 5-minute chart, 15-minute chart, and watch for minor bearish patterns around it. It will be better to get it. Of course, you could do this without it, but if you will get the clear bearish pattern on the 5-minute chart around 103, all the better.